Hi, and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the Bitcoin charts, but we're going to be taking a look at this on a macro level. We'll be taking a look at weekly, maybe daily at a push, but for the most part, given my thoughts and opinions on where I think the bear market is heading, where I think the bull market has the potential to go to, and all that wonderful stuff. So as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. Let's jump right down into today's video and let's kick things off with the bear market kind of point of view. So there's a few things to kind of consider here. So this is a chart that kind of shows a bit of the history of Bitcoin, and better for worse, depending on whether you like this kind of stuff or not. There's a lot in here worth kind of talking about. It's a bit messy, but that's kind of just how my brain is. It just dumps all this stuff down on the chart here. So let's kind of work through. We've got the green lines. These green lines are the Bitcoin halving events, as you can see right here. Bitcoin halving, and Bitcoin halving. Okay, so halving events are kind of dubbed as the big catalyst for bull markets, right? And I couldn't disagree any more. I think that is a bit of a false hope, just marketing ploys, in the same way that a diamond is a girl's best friend, right? Essentially, it's easy to get your head around these things in terms of Bitcoin halving equals bull run. Very simple. Can't get it wrong. So simple. And obviously, there's a specific date to it, so retail investors know exactly when to buy, right? Not so much. Unfortunately, that isn't necessarily the true representation of a Bitcoin halving. Bitcoin halving essentially halves the mining rewards when it comes to the mining activities of BTC. And obviously, you need to produce blocks in order to confirm transactions on the network, on the blockchain. And as such, for completing those blocks, you earn rewards. Keeping the halving going and making it more difficult to mine BTC as time progresses essentially makes the network potentially, in my opinion, vulnerable long term, because it does require Bitcoin to be of a substantial price to be profitable to run Bitcoin mining. And if it becomes unprofitable long term to mine Bitcoin, then that's potentially going to cause some potential issues to BTC longer term, right? Because who's going to run a Bitcoin miner at a loss, right? If it costs more energy than it does to actually earn the BTC. So Bitcoin's price has to be significantly higher as time progresses in order to balance the cost of running a miner. If you have no miners, you have no blockchain, right? So it's quite important that Bitcoin's price pushes up aggressively in line with the Bitcoin halving events, right? Makes sense. However, the issue that you have here is that the price action doesn't really care about mining activity. Price action only really cares about two things. That is the supply and the demand, right? And those are the only two things that really have an impact on price movement. Now, you could argue that if the price of Bitcoin is down low, that the supply is outpacing that of the demand, as in there's not enough demand to soak up the supply, and therefore price goes down. And that's the very definition of a bear market. And of course, if the demand is higher than the supply on the market, then price will go up. People can charge a premium for the asset that is sought after. Supply and demand are everything. So when it comes to the Bitcoin halving, we have to consider the circulating supply. 19.4 million BTC currently out there at the point of recording this video. So halving the additional rewards, or halving the rewards going forward, actually is only going to affect the additional 1.6 million that's yet to be mined, right? Quite straightforward. And so if we're only really talking about halving the rewards of the 1.6 million, then that's not really going to be a constraint to the supply element further down the line. Yes, there's going to be harder to mine new Bitcoin, and it's going to become less new Bitcoin entering the ecosystem of them or the market. The problem still remains true, that there's still 19.4 million BTC out there. And that supply of Bitcoin is basically what is going to either suppress the price or push the price upwards when demand comes in. So the Bitcoin halving event in itself isn't really going to be a catalyst for anything, because it's only really talking about a very small amount of the supply that is yet to be mined. But as I said, People love to speculate on these things, and so that's what this chart here is trying to show us. Okay, in here we can see that the last Bitcoin halving event, approximately May 2020, we can see that there was a significant surge to the upside. However, this is not the bear market low point. The bear market low point actually happened a significant period time beforehand. We can see that was actually December 2018 down here, right? So we know that the bear market low point came in December 2018, yet the Bitcoin halving happened in March or May 2020. That was actually a significant period of time, approximately 455 days. During that time period, Bitcoin's price had actually moved up very aggressively in that first move, over 336%. So if you were waiting for a Bitcoin halving event, that was not a catalyst for the bull market, because the bull market started in December of 2018, you would have missed out on 336% of gains. Now, obviously, we had the COVID crash, and obviously there was an opportunity to jump back into the market there just before the Bitcoin halving. Again, if you're waiting to the Bitcoin halving event before you jumped into the market, then you would be missing about 161% in gains as you missed that crash as well. So we know the Bitcoin halving event isn't the catalyst. It just happens to coincide roughly around midway through that bullish market if we take that time into consideration. You might be thinking, well, last year was just an exception. So let's go ahead and take a look at 2016's halving event. And you get the same story, guys. We can see down here the Bitcoin bottom actually occurred in January of 2015, and we had a run of 413% before the Bitcoin halving. Again, if you had waited, you would have missed out. There was no pandemic crash here, so you could have jumped in at the halving event. Let's be optimistic and say it was this wick down here, and you could have basically got in about 3,540% in gains. Okay, so 3,500, or you could have taken the entire thing at about 12,000. Okay, so we know that there's obviously this idea that the Bitcoin halving event is a catalyst, but in the two previous halving events, you can see that that isn't the case. And both occasions, it's about halfway through that bullish market that we actually saw the Bitcoin halving event happen. And then, of course, we can see the Bitcoin halving event from 2012. And that's the same story. Even though it was more volatile back here and we had the double peak, we can see that actually there's a low point down in December 2011, and the halving event happened in 2012, halfway through that move to the upside, where there were 51,000% in gains. Now, don't get me wrong, those kind of gains we're not going to see again, but it's an interesting kind of point of view, because a lot of people are kind of pinning their hopes and dreams on a Bitcoin halving event, and yet I simply think it coincides with some other fantastic stuff that's already happening in the space. It's not something that we can kind of trick ourselves into thinking is a massive catalyst for upward movements in price. Now, of course, if the Bitcoin halving event is in April 2024, then that would lead me to think that maybe the bottom is in for BTC. That is, of course, if history tends to repeat itself. And that's something else that this chart tells us as well. This chart is dissected the previous bear markets, and it kind of shows us with some underlined variable changes that we do not see in previous bear markets. So in the 2014-15 bear market and the 2018 bear market, we have corrections of 86% over a 413-day period in 2014 into 2015, and we have a 84% bear market low over 364 days, and both of those crashes and those bear market movements to the downside stay within the parameters of a three-wave correction from an Elliott wave theory point of view, and stay between 1 and 123.6% retracements on the C-wave structures. This is actually very critically important in understanding the underlying issue with the existing bear market that we find ourselves in. Now, the 2022 structure unfortunately went down deeper than 1.236 or 123.6%, and actually went down deeper than the 138.2% retracement, so deeper than the 1.382. This essentially led us down into a W, X, Y, X, and Z. This is one of the reasons that we were saying that the June low of 2022 simply could not be the bear market low point, as it broke the fundamental underlying variables that we had seen in Bitcoin history. And although all the indicators back in June 2022 were telling you that, we're in a bull market now, we were telling you that things were about to change. and we're rewriting Bitcoin's history. And that's exactly what we've seen. We completed the Z-wave movement on the FTX crash, and we still could potentially drop down even lower under a three-wave correction pattern that leads a WXYXZ ABC structure upwards and potentially even another WXYXZ to the downside. Now, it's a long shot because I do think the higher that we've pushed and the longer that it takes, the more probable the scenario is that the Bitcoin bottom is in. Okay, so this bear market is just different. Okay, we cannot look at it and look at the history of Bitcoin and say it's doing exactly the same thing, because it just simply isn't. But that's not to say that, we could have seen a weaker than usual bear market low point on a Z-wave structure at 77%. It is possible. And so that's the hope. The hope is that the bottom is in, and I kind of hold the I guess that wild card where we might still see an additional low, which I'm hoping not to. We're hoping that $20,000 Bitcoin is the retest that is required. And then from there, we can rally on up into the next bullish market. That's the dream. So that's the bear market. Well, what about the bull market? Well, the bull market finds itself at its potential interesting areas. Let's jump over into it. So this is the three-wave correction for the bear market low point. Okay, we can kind of see that that's a wild card scenario. We can see the Z wave here. Let's hypothetically say that we have bottomed out, and this curved line at the bottom here needs to move up here, and all we need to do is essentially tweak our curvature of our line ever so slightly to bring this in line with our recent structure moves, and yeah, maybe that's kind of where that sits, right? And that's the idea. This is probably what you're seeing in a lot of places. The bottom is in, and this is what it would look like. Okay, so it's a possible scenario. It's not one that I think you can completely say is 100% guaranteed. And as you can see, we're not touching down here at the low end side of things and following that line upwards. So we're missing the lows over this side as well if we were to just connect the two recent lows over this side. Okay, so I don't think this is one that's guaranteed by any stretch of the imagination, but let's hypothetically say that that is what's going on. Where does that next bullish market actually take us? Well, on the curvature line at the top here, we've connected all the peaks. So we have the peak of 2013, we have the peak of 2017, we have the peak here at 2021 April, not the peak of the 69,000, but actually the peak up there on April, which was 65,000, right? And if this is the case, and we do find that this is actually the elasticity curve for Bitcoin, then actually we're talking about $110,000 BTC. Maybe we might be able to push this up depending on time frames. It depends on whether it's going to be 2024 or 2025. You might be able to squeeze a little bit more out of it. But for the most part, we see diminishing gains overall. Okay, so we can see that in the previous bullish markets, right, we can see that the bull market over here from the lows of 2011 up to the highs of 2013, 48,000%. We can have the lows of 2015 up towards the peak of 2017, 12,000%. We then have the lows down here in 2018 to the peak up here in 2021 at 2,000%. So we see diminishing gains overall. And if we come up here, we'll be talking about 600% profit. Now, this is pretty basic because this is showing you one of the issues when it comes to all things, regardless of whether it's a crypto market, a stock market, or just the supply and demand elements for any real world asset, whether that is your milk and your bread or whatever, right? Ultimately, supply and demand are going to be the things that cripple Bitcoin. And this is what I was saying earlier with Bitcoin miners potentially having long-term issues if Bitcoin's price doesn't go in the way and that they need it to, right? Because Bitcoin mining is all about the profitability of Bitcoin. And if Bitcoin's price doesn't go to $500,000 or $1 million, then Bitcoin mining operations just become long-term not really viable. And if they're not viable to basically mine Bitcoin, then they're not going to be running those miners. And not running the miners, you're not creating blocks. If you're not creating blocks, then who is going to be able to run the blockchain? Okay, so there's a few issues with that. Now, I'm not saying that it's going to happen. Obviously, these are all just ideas. And if we just follow the logic of things and we can see the elasticity of Bitcoin here, then a 615% move up towards $110,000 is something something that we need to kind of consider. And so this is an idea. Let me know what your thoughts are in the comments down below. This is assuming that the bottom's already in. If the bottom isn't already in, then we can see more percentage gains in BTC. I do not expect us to really go ahead and peak above 140k. I think that would be kind of where the limit would be. But let me know what your thoughts are on this in the comments down below. I'm going to wrap this video up right there, though. If you have found it useful and informative, smash the like button. If you're new to the channel, subscribe. And if you haven't yet joined us in Discord, why not check it out? Link is in the description down below. Until the next one, have a fantastic day.